So Marriott Vacations Worldwide announced on November 8th their quarterly earnings for the third quarter 2021. I'm going to go over what I thought were some of the most important details right after this. Hello and welcome to Destination Timeshare. I'm Jeremy. We're going to jump right into this video talking about the November 8th earnings call from Marriott Vacations Worldwide. What is Marriott Vacations Worldwide exactly? Well, they're the parent company of Marriott Vacation Club, Vistana Signature Experiences, Hyatt Residence Club, Welk Resorts, among a number of other ones, including Interval International and several other timeshare-related brands and some non-timeshare-related brands as well. But we're going to jump into this talking about their earnings call. So on the earnings call, they mentioned that they have 700,000 owner members. Obviously, that's combined from Welk, from Vistana, Hyatt, and Marriott Vacation Club as well. But just want to point out here some things that I thought were of important note here. 95% occupancy in Hawaii in the third quarter. And something they noticed is when the governor of Hawaii, he kind of put out a plea, I believe it was around the end of August, first part of September, to say, hey, please don't come to Hawaii. They were having, obviously, increases in cases there. They saw the percentage dip a little bit, but not too much. So just something to note there. 95% occupancy in Hawaii. That is actually pretty good. They also did mention that the occupancies in Orlando, it's a big market for them. Orlando, lots of resorts there for Marriott Vacation Club and Vistana. That the occupancies did drop in August and September when the variant was kind of running throughout the country and Florida had a lot of cases. So just something to mention there that their occupancies did drop a little bit in Orlando, but the Florida beach locations actually saw significant increases in occupancy versus 2019. So that was obviously pre-pandemic. One other thing they mentioned, their urban centers are actually doing pretty well. San Diego had an 85% occupancy and Boston had 95%. So definitely doing good occupancy-wise throughout timeshare. That's one of the things about timeshare. You're paying for it already, so occupancies tend to always be pretty high, even in slower or lower economic times. People are still paying for their timeshares, so they're usually still going to them. Now let's talk about the earnings. The whole purpose of the call here, they did say they had $380 million in contract sales in the third quarter, saying it's just 3% below 2019 levels. Now, they did mention that 30 million of that was from Welk. So obviously they didn't have Welk back in 2019. So just kind of derive from that. What I'm saying there is, essentially if you take out the Welk sales, they're probably a little bit even below 2019. But definitely doing a good pace here to get back to kind of normal sales volume. They did mention that the board has approved reinstatement of the dividend and also a $250 million stock buyback to return value to the investors. So definitely it seems like things are going well at Marriott Vacations Worldwide to be able to buy back stock and return that value to investors and start paying a dividend again. So other things of note here is that they mentioned their plan is to bring Welk Resorts back into Interval International. Currently, I believe Welk Resorts trades, at least their internal point system trades within RCI. Their plan is to now bring that back into Interval International, which Interval International was part of the ILG acquisition that Marriott Vacations Worldwide did a number of years ago. So they want to bring Welk Resorts back into Interval International, obviously more fee income for them there. The plan is to bring them back to Interval International by January 2022, kind of a full year ahead of what they originally planned. Another thing, they kind of just made a little mention of this. I'll probably do a future video of what my thoughts are on the integration between Marriott Vacation Club, Sheraton Vacation Club, and Westin into a single points product. But they did mention they're making good progress linking Marriott, Westin, and Sheraton Vacation Clubs into a single points product with plans to improve owner access to all of those properties sometime in the first half of 2022. What that means, what that is, it's anybody's guess. But we'd like to speculate, and like I said, I'll do that in a future video. Now just three more things here. Owner and preview reservations are up 10% in the first half of 2022. Cancun and Cabo locations, these are locations with Vistana, are now able to operate at 100% capacity, something they mentioned based on regulation changes there in Mexico. They also mentioned they're back to 85% of their sales staff. So it seems like they've been able to ramp up that big sales machine to obviously churn out $380 million in contract sales. Certainly doesn't seem like Marriott Vacations Worldwide is struggling in this new economy. What do you think of this video? What are your thoughts on these earnings by Marriott Vacations Worldwide? Let me know all about it down in the comments below. And also, if you like this video, please be sure to give it a thumbs up. It really does help out these videos. And to see more videos all about timeshare, check out the description box below. For another timeshare news video, check out this one right up here and YouTube. They think you'll like that video down there. Be sure to subscribe. You can do so by clicking on my picture right here. Hit that notification bell. And until next time, let's make your next destination a timeshare.